The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the reach do we go, dear friends. Of course, as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, what do we got going on today? We're up 4.5 points in the S&P cash. We almost tested 2,400 at 2398.16. Volume's a little lighter than it was yesterday. Volume has been a little higher each day as we've pushed higher, but nowhere close to what I'm looking for or what we've had previously when we've pushed up to these levels in the S&P over the last, whatever time that we've all been bouncing around this 2400 hour. So we are up here kind of on a lighter volume than previous highs. Is it enough to make this thing hold? I don't know. As I said yesterday during the show, I kind of got the idea that maybe we've got what Richard Wyckoff called a buying climax. That's when everybody piles in, and there really isn't anybody left to pile on to get the market up that much higher. We talked about in the fall when Amazon kind of fell out of bed during its earnings, that sometimes just everybody that could possibly ever want to buy a stock has bought it at that time. And there just aren't anybody, there's just nobody behind them to continue to prop it up. And it can fall back and then go back much higher. That's what we saw in Amazon. I kind of think we've got something very similar going on with this market. Is there, some kind of fly in the ointment that makes this thing go back down to 700 on the S&P? No, I'm not expecting the end of the world. And was kind of surprised over the last few weeks to see everybody talk about the end of the world and the market go higher. Now I can't find a bear. This is like in a bear-free zone, trying to find a bear. Couldn't find anybody last night or anybody that would talk any kind of brown stuff about the market. Nope, everybody was positive on it. They thought that the only thing that could happen is the market goes higher. And the problem is that you kind of have to have people that are a little negative, or everybody's positive already. Where are the people that are going to go from bearish to bullish to buy this market? I just can't find them. I don't think that there's much up here. I think we could have a nice little pullback like Amazon did recently. Not because the earnings are so bad, just because everybody that possibly could throw a dollar bill at this market has. And we need, and for the most part, the last little bit has just been short squeezes. People that did squeeze out, now they've all turned bullish. Can't find a bear in the woods. And you know what bears do in the woods, don't you? They look for other bears. And they eat campers. So best to just stay in my home and not do any camping, I think. Anyway, volume's a little lighter. The mood is, if not giddy, as far on one side of the boat as I've seen in a long time. As I said yesterday, for me, it's just a lot of people pushing this thing across a perpetual finish line. It's not uncommon to see the market sell the news, and I think maybe today is going to be the best news day for the markets. But it's going to be, the proof is going to be in the pie and the eating, and that pie ain't coming out of the oven probably till late summer or fall. And maybe we pull back and actually rally when the bills are actually passed and signed, and we know what we're talking about instead of today. where they are selling the sizzle, not the steak. The steak, it's on its way. They're still growing it out in Iowa somewhere. It's still being raised. It still has to go to the slaughterhouse. It still has to be cut up, and it still has to be shipped to a store near you. That I just don't see it. I don't feel it, and I dislike the fact that everybody in the world thinks that the market is going higher. At least everybody that I could find. So I'm, as I said yesterday, starting to get a little bearish in a few sectors. If this continues, I'll add some more. But I kind of like my positions just the way they are right now. As always, we like to start the day off with a little bit of history.
That it's all just a little bit of history repeating.
It is history repeating, and on this day in 1956, 1954, excuse me, the Salk polio vaccine field trials involving 1.8 million children began at the Franklin Sherman Elementary School in McLean, Virginia. Children in the United States, Canada, and Finland participate in the trials, which are used for the first time in the now standard double-blind method, where neither the patient nor the attending doctor knew if the inoculation was the vaccine or a placebo. In this case, it was salt water. On April 12, 1955, researchers announced the vaccine was safe and effective. It quickly became a standard part of childhood immunizations in America. In the ensuing decades, polio vaccines would all but wipe out the highly contagious disease in the Western Hemisphere. And I kind of really noticed, because I had a mailman that had polio, and I think he had more problems than this polio. But let's say he wasn't a happy guy, wasn't a happy camper. Probably was out there and the bears attacked him. I saw a lot of people with polio, saw less people with polio. Now you see almost nobody with polio, and guess what? Everybody hates polio vaccines. No more iron lungs, no more of that stuff. But, I know that vaccines kind of get a bad rap. But sometimes there isn't a perfect zero risk thing in the world. You just have to take the lesser of two evils, and this one seems to be like the absolute least risk in the world for somebody. I know that, especially in California, in the LA school district, that polio, other diseases are coming back because, of course, a lot of people are starting to believe a lot of witchcraft, that these things don't work. In fact, I had somebody tell me all about how mercury is in these, and of course, if anybody knew anything, they took the mercury out in 2003. All the vaccines that had mercury in it had been used by 2007, so you can't get mercury in your vaccine anymore. There's a lot of truth to go around, but I don't think that you can get any more truthful than say that this is probably one of the biggest medical advances of all time that now kind of gets a bad rap. We probably need to go back and get a little taste of a few people having polio to really know just how really good we had it on this day in 1954, when we kind of moved a little forward, double-blind tests, stuff that worked. We must move on.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Michael, we're bigger than U.S. Steel.
Oh, I love that line from The Godfather. And, of course, a thinly veiled portrayal of someone else that was in the mob that reportedly actually did say that. And they put it in the movie. But I always love that. Hyman Roth, not going to be happy today because if he's bigger than U.S. Steel, it doesn't have to be as much as it was yesterday. Down on heavy, heavy volume, right back into these double gaps as we've been talking about for some time. These double gaps are acting as huge attractors. And in fact, this gap is like a quad gap. We'll go back through this, but just amazingly how these gaps in stocks, especially when they start piling up, are almost, they're huge magnets for this. The first time this stock gapped up on this was in July 27th of 2016. It gapped through it yet again onto the upside on November 9th of 2016. It gapped down through it on, August 10th of 2016. So that's 1, 2, 3. This is the fourth gap right into this area. Actually, the strangest part is that this is going to probably fill this gap for today, and you'll still have part of some other gaps. But, of course, now you have a new gap going from $31 down to this $24.50 area. But a gappy little sucker, and guess what? It went right back down to where it would have if it failed, which is on this double gap. So look for the double and triple, and I think this is a flying Wallinda quad gap. I'm thinking that's my new name for these, but certainly a big, huge move out here. 23.92 on the S&P cash, so we're up 4 points. Volume, 2.54 billion shares. What are we up? We're up 5 points on the NASDAQ. I think we're probably going to wait and maybe even pull back a little bit into earnings tomorrow night, where I think we're going to have some fireworks. And yes, to the downside. What else do we have? Alaska Air. This one's down a little. Didn't react as much as you thought it might. Earnings just so, but back under 90. Take a look at some of these others. Anthem, a nice move. Of course, the Express Script deal yesterday, they kind of already moved up. Would have liked to seen a little bit more volume out here, 2.2 million shares. You're really looking for this thing to break with 2.4 million shares. So maybe it comes in with 3 million shares, which would be enough. Amphenol Corporation, which is always an interesting to watch company because these guys make a lot of connectors for electronics. When they're doing well, generally electronics are doing well. This tried to spike higher today. Did so with not enough volume. It's coming back into the trading range. You were looking for a little 2.1 million shares from March 15th at 71.98. We went through that, didn't get it. If it closes back in the trading range, actually fairly bearish. Boeing beat on earnings, missed on revenues, down a little bit, but nothing to speak of. Volume is all that exciting, 3.3 billion shares. Baby, which is Nautilus, medical care, dropped the chalupa. It was down. It is picking up volume, 33.55. Looks like where it's headed to. Baxter International, another one. Now this one is back up into heavy resistance. I'll have to go back and look at that. Does this thing? I bet this thing split. I will have to take a look at that. Let's see, take real quick. Does this thing split? No, I don't see any changes. There must have been something back in here that's missing. I'll have to check that out. It's coming right back. Did it really? Yeah. There must be a data error there I need to check out. BXP, Boston Properties. Down, huge candle. Volume's not anywhere close to what it was on March 14th when it came down with almost 1 million shares, although we could see that by the end of the day. Just a little under 700,000 so far today. CLGX, which is Core Logic. This one's right back up to its resistance level. It's been all over out here today. I don't know if this lower tick out here is false, but I think it's real. I'll have to go back and look tonight through the trades. But, this got into the previous high, got it with double volume and rolled over. After the bell last night, CMG came out with earnings. They were up about 25, 30, 35 bucks at some points. Let's take a look at this real quick. Go back out to my movers here. Hang on a second. Okay, so CMG is up $11.80 now, which is about 2.5%. They were up, almost triple that. And word came out after earnings. The release was put out that, all our credit card systems were hacked. Everything. The whole ball of wax. They got the crown jewels. So it kind of came off. Nobody getting that penalized yet for credit card issues, and maybe there's enough news that CMG is not going to get papered and tarred and feathered with that as many others have. Capital One Financial down a little bit today. Volume has picked up, but it has kind of reversed a little off the open. I don't know if it was that bad. I don't see anything in that one. Cree, the light bulb company. We were short this one in the newsletters a while back, a year or more, when this thing was around 60 when it broke. But it just seemed like it's going to be almost impossible with GE and other mass manufacturers making high output LEDs for this thing to actually be a long-going concern that makes a lot of cash. Maybe they'll come out with some new product. Down and busting through the November 4th low with gusto. You had 1.1 million shares back on November 4th at $20.75. You got within about 8 cents of it today with 6 times the volume, so it can't be good. We've got, what is CS? Credit Suisse. Nice little pop out here. Again, is there news? What happened to gold mine? Getting action. Is there news? Don't know. I just think it's the whole tax thing and the dollar thing. And we didn't even get into the dollar. Dollar, I think, came off of 99. It was up a little higher, got up to 99.18, and it's kind of come off very hard in the last 20, 30 minutes. But I think that's just more discussion about what's in the taxes and just bouncing around a little bit while everybody's trying to figure out what's going on. I don't see that much out there. Gold's back to flat on the day, but ain't saying much after the last few days. Okay, so what else we have? Credit Suisse up today. A little bit of earnings, got second gap up. Man, I would think that this might be if it was more expensive stock, I might pull the trigger on it short if it gapped up one more time. When we come back to Discover Financial, what else do we have? Lumina, Hershey, First Solar, got a ton. Just going through earnings. There's going to be a ton for the next couple of months.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Kind of a big spike back through the lows. April 26th today, $93.44, 4 million shares. That's compared to 2 million shares on the last time. Now it's back into the trading range, but still does not look all that good. Dr. Pepper, I think is the next one we've got. Huge gap down. You know, this really looked like it wanted to come back to about this candle, and it came to it now. On the 14th of February, 2 million shares on that day. I think this is just on the halfway down. Again, a lot of these stocks in huge trading ranges. This one, I don't know if you could call it huge, but 99.47 back down to 83.04, which is the December 1st low on this. A lot of people talking down soda drinks, and I don't know why. Edwards Life Sciences, right back into another double gap that we've been talking about. How many of these things are firing right back in to these double gaps, either higher or lower. On this one, the first gap comes on the 27th of July last year, 5 million shares to the upside. It then gaps down right through this price range on October 26th on 16.8 million shares. Today, it's right back up into this with 6 million shares. So, is this about as good as it can get? Is it going to fill this gap back down to 100? I would say if the market pulls back, that 100 is going to be the first level of support. You got a lot of shorts probably getting squeezed out right here. I certainly, if I was long, I'd sell it. If I wanted to buy it, I'd have to wait till it came back to 100. FLIR, which is FLIR Systems Forward Looking Infrared. If you're not familiar with this thing, huge move out here. Volume's kind of picked up. Not exactly sure why it had such intraday swings, but it certainly did. I don't think you can make anything out of it other than a lot of games. Hershey didn't move much on earnings. Aluminum is back up and filling this huge gap down that it had on earnings. Came back here, and what'd you get? 11 million shares to the downside. Filling that today with 1.1 million shares. This company makes a lot of DNA sequencers, probably a fairly good business. I think they kind of flooded the market with it for a while. Ingersoll Rand, another move back up higher, some decent. They make a lot of industrial equipment, and I think just the thought of building gives them a little push higher. The big winner out here today is iRobot. This thing took off like a rocket, a real sign of strength. And, your second huge gap, probably looking for one more. My guess is this thing is on its way to 100. Juniper used to be a perennial earnings whack job on Juniper Networks. This is just up to its previous high. It is going through it with volume today, 7.6 million shares on December 8th, the day after a day that will live in infamy. 29.21, $7.60. And, of course, 20 million shares. It looks like we're going to hold that high, and we're through it. You've got two signs of strength now. The first one goes back to October 26th. This gapped up on 17.7 million shares. So, nice day for Juniper out here. KMT, Kennametal, with U.S. Steel looking pretty horrible. Kennametal, doing the opposite. You would have liked to seen a lot more energy out here. This is popping up without the requisite volume to a new high. So that is extremely suspect. Keep that on there. Logitech, the keyboard and mouse company. This is a gap-a-palooza. And you've had 3 or 4 real big moves out here. My guess is that we're probably fairly close to an exhaustion move in Logitech. The first gap up was on 728. So what is that? July 28th of 2016. You get your next huge unfilled gap up on October 26th of 2016. You get your next gap up on January 24th. So this does have a 3-gap play all the way underneath it. This has a lot of volume up here, but my guess is that you can look at a lot of these stocks, and I am calling a Wyckoff buying climax in a lot of these things. I think you could see, especially Logitech, with some of the new things happening out here, they may be one of the more susceptible to a huge change in what's coming in technology. MGLN, which is Magellan Health, this one spiked a little lower, but no big deal. Northrop Grumman. Again, a lot of movement by the end of the day here, not much. Norfolk Southern on the heels of some other train companies not doing much on its earnings. OC, which is Owens Corning Fiberglass. I've been talking about some of the stocks out here that look like there may be some problems in the housing market. It may have hit its high. Owens Corning. I always think of him as the Pink Panther. Looking rather interesting. Down, volume's okay. You actually kind of tested the previous high on the same volume when we go back and look at the March 16th high, to 62.79. You went up to it, didn't quite pierce it on April 25th yesterday, and then it has reversed back out here. But I'm seeing a lot of these stocks that are starting to show some weakness in the housing market. Not exactly sure why. Oshkosh, O-S-K, Oshkosh, Bigosh. Now this one's been making triple, or you maybe even call it a quad high. An abandoned baby on this one. Going back to yesterday, you had your Doji with about 1 million shares. Today you're down with 1.3 million shares. So you've broken the previous high. You wanted to see more than 1.4 million shares from the January 26th high in Oshkosh, by gosh. Didn't get it. And that's it. Gap blues. What do I want to look at? CCR? Clearwater Revival? Is that what I want to look at? I don't know. Oh, no, that's my initials. Okay, I just wanted to make sure. Didn't look at it. Penske Automotive Group, PAG. This one looks like it may have done a 50% retrace today. And let's just take a quick look at that one. Let's go to 6 months. Okay. Did almost a 50% move of this larger move. Let's kind of get this down here. There we go. 56.05, the December 8th high, the $43.36 low on April 7th. We've gone back up and done a 50% retracement on that. Just about a little volume. But to me, you had some short covering for 1 or 2 days in this, and now you're back up to the 50% retracement. To me, I think you could make a good case for the automotive groups in general, making ABC downs. But you got your 50% retrace, and man, I'd probably be a seller in the automotive group right now. Do we have anything going on? Yep. There it is. We'll be back after this short timeout.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And you got plenty time to give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can put a message in the den. So let's go back here and check out real quick what we have happening in the main markets. And that's we're 23.94. We're up 5 points in the S&P cash. Volume looks like it's going to be a little bit less than yesterday. But, again, it's all about the last 20 minutes. There's so much volume coming in at the end of the day these days as a percentage that it can easily swamp predictions that I make at this hour. And you have to wait until the game ends. I don't think there's anything. You used to be able to tell a lot better, but a lot more juice coming in at the end of the day. Pepsi products. Saw this CEO out earlier today trying to tell everybody about how everything had changed. And it helped a little bit. I think it was about 112 when he was making the rounds of the financial infotainment systems. Again, a lot about carbonated drinks. He was telling everybody about how many guilt-free drinks and other things that they had. Doesn't matter. You don't make your numbers, you don't make your numbers. Procter & Gamble. Of course, I lived in Cincinnati, and if you ever drive through I-75 as you come across the bridge, if you're headed south, look to your left, and you will see what they call the Dolly Parton buildings, and you will get the idea when you see them. They're golden. But Procter & Gamble, what else can you say about it? Again, miss, down a couple bucks, not the end of the world. Certainly not the kind of volume that you would associate with a miss out there. So it's actually getting a little bit more out there. Shutterfly. What do we have? This thing really didn't much. It's finally filled this gap. Went into it yesterday, kind of rolled a little off of it. This thing did a lot more retracement than you probably would have liked. But it didn't retrace anything. So, yeah, got the retrace in there. I would still say, though, the volume is poor on this. The business, I think, has problems. I would watch this one for a potential signal on a short in the next few days. Silicon Laboratories kind of spiked up there with volume yesterday, about the same today, nothing. On the loser side out here, in fact, we're going to give these guys a helping of the loser horn. The hard drive companies man, you have to wait to short them last night. Acted like there was no way that they could have missed. A lot of people, analysts, beating the drums on how this whole thing had changed. We'd been short in the Tech Insider, like Western Digital, when it was up at about $110. It's hard for me to ever see how these companies are in business in a few years. The question is just getting the timing right. But we got kind of the answer here, and that is probably with the best market for PCs in several years, they're still missing earnings. And I don't know if you can make anything more about it than that. SYK, Stryker, absolutely nothing, just kind of hanging around where it was before earnings last night. AT&T, the same thing. Twitter, a lot of people thinking there's signs of life. It's just, again, if you don't instantly go out of business and you have a ton of shorts in your stock, to me, the place to pull, to think about a short, if you were going to, which I'm not, is somewhere around 1825, 1840. My guess is that this will probably stumble back up to that area. Texas Instruments, again, just kind of a nothing day out here, maybe a little cloud cover, but I don't think you can make much about the news on that. Universal Health Series, a little lower, volume's about the same. United Therapeutics, this one finally filling a gap up that starts back around the November 3rd, ended on about the 9th, kind of this whole gappy area. They went sideways for a while, pulled back down. I don't know if you can make anything out of that yet, but I would watch that if you get more sideways action. We might have some support levels brewing in that. United Technologies, this one back above previous highs. Really can't say this thing had a sign of strength out here today. It should have been able to go through and had a lot more volume. In fact, we got to go back here a ways. It's actually back up into its previous high. Volume is going to be about the same. February 20th, 2015, when this thing was 119.01. 119.25. So it's pierced it through it. You're going to have a tiny bit more volume. I think you are. Man, that would be a hard call. But that one may take a while, but I think it's probably topping out somewhat too. Wipro Waste Management. Take a look at this one real quick. Again, you still have plenty of time to call at 877-927-6648 or email me at path@tfnn.com. Waste Management also getting the loser horn, but for $2, I'm not going to play it. Down big cover, but not the kind of volume you would associate on this. You never really had the sign of strength that I was looking for through the December 20th high. So a close below 71.78 is very problematic for this company. When, of course, now you got the huge move out here with a sign of strength. This is a proxy for China and Macau gaming, but just about everything you were looking for. When does LVS come out? Probably tonight, right? Maybe I'll check during the breakout here. It didn't get quite so much as that did, but I'll try to find out when earnings are. But normally LVS is 1 day or 2 days after it, so we'll keep an eye on that. A potential trade. I don't think that there's going to be much difference between these two. Why you're probably already getting a little bit or half the love that you would get on Las Vegas Sands on earnings. WYNN, which is Wynn Resorts, is back in and finally filling this long-term huge gap down. That gap happened on the 29th of April, 2015. So we are now 2 years into this gap, and it's finally filling it. This thing came down with about 15.7 million shares. A lot of people, if they rode this thing all the way down, man, I can't imagine them holding it another day if they were in it around this 127. But I think that's probably about as good as things get out here. I think if you bought this thing back at the lows and you've had this thing for a while, it's been a big winner, man, I think if you continue to hold it, you're extra, extra greedy. And we all know what happens to pigs. They get slaughtered. But, man, I think that's about as good as you can get. Coming up, filling that gap, I'd certainly want a long consolidation before getting back in it again. We will be back after the break. Up 6 points on the S&P cash. Volume 2.8 billion shares on the NYSE. We'll look at some of the bigger stocks out here. And again, kind of waiting into Thursday night where I think maybe the disappointments in earnings will come.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
During the last century, there have been 34 bear markets, approximately one every 3.5 years. And since 1946, bear markets have accelerated to a rate of one every 5 years. When it comes to market corrections, the kind that take back 10% or more of your gains, they've been occurring at a rate of one a year during the last 100 years. Now, if you're in your 30s or 40s, you can probably weather the storm. It only took 13 years for the S&P 500 to get back above the highs that it made in 2000, which is much better than the NDX 100, which took 16 years to do the same. Look, it doesn't matter what age you are. There's nothing more important than protecting your nest egg. And on Wednesday, April 26th at 5:30, I'll share with you 2 simple patterns that have been present at the beginning of every bear market and how knowing these will save your retirement. We here at TFNN believe this knowledge is so vital that every member of our Tiger family will have a link on their members page for this 30-minute presentation. If you're not a member, come over to the homepage of TFNN.com and sign up now. TFNN.com, we've got your back.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what do we have? Well, got a email asking me. Scott says, I bought puts on U.S. Steel. They've paid off here. Now, what do I do now? That is kind of a really tough question. If it's a tech stock, I normally just go ahead and take the cash and run. But you have to, of course, take a look at it. And this thing is sitting at what should be rather huge support on these gaps at around $22. So you're probably not going to get any more money out of it or any more destruction. My guess, though, is you're going to get 2 or 3 days where this thing just goes sideways down in this $22, $23 range. And what you look for in puts is normally all the premium just gets taken out because no one believes this thing can go any lower. but that the premium will slowly come back in over a couple of days. So even if it doesn't go anywhere, you're probably going to get a little mileage on that. Why the people that own the equity are getting squeezed out and trying to get a margin call if they were in this sucker. Your thing is just to sit on your hands for a couple of days, let that premium come back in, and then let them have the puts. Everybody will be selling them that had them today, which depreciates your premium. And if you've got a kind of a nice move out here and there's nothing that really, I can't see anything really that would move this in the next couple of days. If it was a tech stock, man, you can look at those and go, well, there's a lot more to go, or I'm probably 8 out of 10 times, 9 out of 10 times, you get those huge moves, and that's the exhaustion move. So you have to play this differently than if you were short the equity compared to the options. The options, you can get some significant cash back into these as the premiums come back in. So just watch that. Sell it as soon as the premiums come back in. This one's a little different because you do have what should be rather massive support out here. But again, you got a lot of people that are probably that were long this. They're going to have a couple of days to get out of it. Normally, they don't let you out of these things early. And especially these kind of stocks, they'll hold them down. They may even push it down a little bit more to get the longs out and get the stock turned around. So I would be out in the next, what is today, Wednesday? I would be out by Friday by 11. So just kind of keep an eye on it. But I think what you don't want is to lose another weekend of premiums in this one. But you do want that premium to kind of creep back in. It'll start tomorrow, probably come back nice on Friday morning. And I'm going to say Friday morning, 10:30 is probably the best time to sell this because you might even get a little bit more pressure going into the weekend to sell this as people don't want to be hanging around, especially if I'm right about having some disappointments after the bell on Thursday night from my reading of looking through the charts and the earnings coming out. So I think we could be kind of soft on that. Again, what do we have out here with about a minute to go? We're up about 5 points in the S&P cash. No real huge move. Kind of I think a selling climax. Volume's going to be okay, not great. But again, I think we could just have a market that is extremely tired, selling the sizzle, not the steak. And I think we just need a nice little pullback out here. And just too many bulls. No bears to be seen whatsoever. They've all gone into hibernation in the last couple of days. Couldn't find any on TV. Can't find any around me. And people that even think when I say bearish, look at me like I got a third eye. I kind of like that. Kind of tells me that maybe this is where the top of the market is because there are no bears left. I'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.